Hey everyone, you guys can hear me all right?
Yes.
Perfect. Thank you. And thank you to those who are joining in the audience. We're still waiting for one more speaker on our end, but as we wait for him, why don't we just kind of jump into the intro here? Thank you to everyone who's jumped in and started listening, and to those who are listening on the recording. This is Infineo's bi-weekly real-world asset space. And today we're really, really excited to bring you a space with Security Token Market, where we're going to cover the last year in tokenization. They recently put out a report with over 350 real-world asset issuers and companies in the space, and highlighting all of them and the different evolution we've seen over the last year. So we're going to be using that report as kind of a starting point and talking about the industry as a whole today. And so if you have any questions for our panelists or anyone from Infineo or Security Token Market, you can drop them under that pinned tweet, and we'll be sure to get those into our panelists. And while we wait for the other speaker on our end, Herwig, it would be great if you could introduce yourself in Security Token Market. And then I also believe we have Jason Barraza from Security Token Market account. And so if you guys want to introduce your guys' selves for the audience, that'd be great.
Yeah, thanks for having us, Jackson. Always a pleasure. You guys do great spaces here, and I appreciate the opportunity to dive further into our report. My name is Herwig. For everybody listening, I'm the founder of Security Token Market. Before that, I actually also founded a compliance company doing investor accreditation software and other related activities. So I have a very good understanding of that background, which led me to advise a tokenization offering, a company that was raising their Series B and helping them tokenize in 2017, launching in the beginning of 2018. And that's sort of what took my journey off into tokenization, helping advise dozens of others in the opportunity. And Security Token Market was our solution to sort of help scale to the masses all the information in one place, what you need to know about security tokens or real world assets, the information about the asset, the trading information, where you can buy it, anything you'd like to know. We try to put that in one place at stm.co. And again, we're excited to be here. We put out a lot of research, and this is our report talking about everything that happened so far this year in the industry.
Beautiful. Thank you so much for being here, Herwig. We're super excited to have you guys. And Jason, behind the STM account, if you want to introduce yourself too, that'd be great.
Yeah, thanks for having us on, Jackson. I always appreciate it and always getting here with you. My background comes from consulting, helping companies anywhere from early stage figuring out business plans to companies that are a little bit more establishing out different avenues for change. Did about 100 of those, and then went on to do wealth management at Bank of America. At the same time, I was helping out at STM and starting to learn this technology, blockchain, tokenization, how it applies to capital markets. And the more I learned it, the more it became apparent and obvious, at least in the wealth management area. So clicked. Very easy decision to come on full time. And so I've been helping out at STM from an operational perspective for the past few years now. It's been a great journey. Excited for where the industry is headed. Obviously, there's a lot in the report that we cover, so excited to dive in, man.
So am I. It's an incredible report, guys. And if you haven't checked it out yet, I highly advise you do it. As we dive in here, I'll make sure and throw that in the pinned tweets for everyone. And for those of you not familiar with Security Token Market, I highly advise you check out stm.co. They have what is the largest data repository of the security token industry, with 616 tokens and over 40 billion in market cap, really tracking all of the most innovative products in the industry, from Billable to all the realty tokens. If you're interested in tokenization, it should be a resource in your repertoire, in your arsenal. And so highly recommend you guys check that out. And if you have any questions, we'll be sure and pass those along to the panelists. And with that, from the Infineo team today, we have our chief economist, Dr. Robert Murphy, and potentially joining us in a little bit will be our chief technology officer, Zuhar Rashid. But for now, Dr. Murphy, would you like to introduce yourself for any first-time audience members?
Yeah, sure. I'll be really quick here. So I'm an economist here at Infineo. And what we're doing at Infineo is, in a nutshell, taking life insurance and putting it on the blockchain. And so that's why, we're always interested in all things tokenization and just, getting more real world assets on chain and the intersection of that tech and old school finance. So that's what we're here for.
100%. And with that, I think that we can kind of dive into this report a little bit. As it is titled, The State of the Security Token Industry 2024, the year of the RWA. it really has been an impressive year in the industry with a lot of activity going on, everything from new issuers to new tokenization platforms and a ton of institutional activity. I'd love to really hear in your guys' opinions how 2024 has marked kind of a turning point in real world asset tokenization. Herwig or Jason, I don't know if you guys want to kick it off for us.
Yeah, with pleasure. I'll set the scene, the stage a little bit. The technology really came to market around 2017, 2018, and really had its first moment in the spotlight as security tokens, if you will. But this was really the first use case of tokenizing, real world assets, businesses, securities, investments. And there was a little bit of excitement, but of course, this is an industry that needed years of infrastructure to be built, licenses to be attained, integrations to be made. And so it seemed like every year afterwards, there was some new reason that made it exciting for the industry. Again, in 2020, COVID put an emphasis on digital capital raising and the fact that you can now, basically run your business that way without having to do any in-person business. But then, of course, the bear market once again brought a lot of, not a lot of interest to the topic anymore. So then you saw the term RWAs come to light these last couple years, but again, without the latest movements, it's really in 2024 that we're going to highlight some major events that definitely makes this year different than any other year from a number of different perspectives: the size of the market, the issuers and participants, as well as the number of options and platforms and different vendors that are available. So this definitely is the year that real world assets have both been embraced by institutions and banks and fund managers, also by the crypto community, both from foundations and protocols diversifying into RWAs, as well as DeFi applications supporting and natively bringing on RWAs like Ondo's tokens and some of Open Eden's products as examples. But also even Congress had a hearing, earlier this year calling for real world asset, education and insight. So this is clearly the term that's been taken over, and it's the concept of real world asset tokenization, hence the year of the RWA, Jackson.
Makes a ton of sense to me. Jason, I don't know if you have Jason or Dr. Murphy, I don't know if you have anything to add there. But I've seen a ton of advancements, kind of like you're saying, Herwig. And really this year, we've started to see a huge surge in tokenized products, including treasuries and money market funds. And that's really played a huge role in getting the financial institutions like BlackRock to buy in. In your guys' opinion, are there certain projects that have really driven this, or is it just kind of the culmination of timing and the technology coming to fruition?
Sure. Yeah. I mean, to your point, it's treasuries are one of the easiest things to understand, right? So it makes sense. And money market funds, it makes sense for those two use cases for institutions to be most comfortable with, trying out this new technology. BlackRock obviously was a huge catalyst, both from a media perspective because of the headlines they, and the waves they've made when they first, tokenized, and then as well as inspiring everyone else to kind of start, jumping in a little bit more on the production side of things. And then we started seeing utility being added to these assets, right? So BUIDL, it's a liquidity fund. It's not a treasury itself. That's into treasuries, right? And so being support for BUIDLs, to be used as collateral for posting margin. We've seen this on Falcon X. And then they did the same thing for a similar product, which is the Superstate USTB token. So that's been great. Then we started seeing the evolution of that and started seeing others start allocating treasury, part of the treasuries into products like these. We just saw the Superstate got chosen by, I want to say, a DAO treasury to be allocated into, and I forget which one, so I will try to reference back. But we also did see a huge portion of Ondo, get allocated into BUIDL, right? And I like to see, Ondo is essentially a feeder into BUIDL. BUIDL has a $5 million minimum. Ondo, a lot smaller than that, and whatnot. But so those are some of the progressions that we've seen over the last few months in the treasury side.
I'm honestly not as familiar with what Superstate did. Is their token similar to Ondo's with how they interact with BUIDL, or how does the Superstate token work?
Superstate's token is separate, right? So they themselves go ahead and invest into treasuries products, and they will be, placed into the website. We can see how it's working. They both have a tokenized version, non-tokenized version as well of their token. Again, they can really invest again into short duration government securities, as per the name. So to answer your question, Jackson, they're pretty similar, but I would compare USDB a little closer to what BUIDL is rather than Ondo.
That makes sense to me. And with that, I would love to kind of look at who beyond, or not beyond, but beyond BlackRock. That's obviously the biggest name that everyone has seen move into the tokenization space this year. But with you guys being more in the weeds with all different tokenization platforms and working with all the different issuers, I would love to understand who, in your guys' opinion, are kind of the leading tokenization platforms in 2024. And even for the listeners, if you could define what you guys see a tokenization platform as, because I know that it can be a little nuanced what security token market refers to as a tokenization platform versus an issuer and things like that.
Yeah, you can even define that a lot of different ways regarding sort of what you define as like the leading by definition, right? Is it by asset size? Is it by the types of clients that they're having? Their problem is very hard to pin down also because of geography. So this is a global phenomenon where you have very active hubs all across the globe, Singapore, Japan, even Hong Kong starting to build over in Asia. Europe's very active because they have a lot of strong foundation regarding regulation clarity and a lot of support from the regulators. And then you, of course, have the U.S. and Latin America is starting to see product development. So you have these different firms that are different category leaders across different geographies. And a lot of them tend to focus on an investor type or an asset type, right? You have a lot of platforms focus on real estate, for example, and make that their shtick. So it's hard to, define any one single leader in one specific category across the world in the industry. It really is sector specific, geography specific, asset specific. Even, whether you define working with large institutions as very successful or, for example, Ondo has had a lot of success focusing on the crypto native audience as well as the institutional market, even having their own Ondo token that I'm sure many listeners are familiar with. But if they're not, they should definitely look into it. It's had a lot of success this year. So you're seeing, again, the concept of crypto embracing RWAs as well, bringing them into their ecosystems. And you have a lot of DeFi companies leading in the space. I mentioned Open Eden earlier. They just received $10 million allocation from Ripple. They're going to be partnering with them. You have Ondo, as I mentioned, and Centrifuge as another one that are definitely seen as category leaders just based on the space. We're talking about $500 million in AUM and more that they've been able to tokenize and bring on chain. So these numbers are not small at all in any way. And that means we're starting to see a meaningful market form, again, across a bunch of different types of asset classes and sectors. It'd be hard to go through every single one of them and name a list of leaders.
I completely understand what you mean there, Herwig, and it was a very open-ended question. In terms of tokenization platforms specifically, I loved how you guys defined them in your guys' report. And just for the listeners, I'm going to read it here. You guys have that a tokenization platform refers mostly to those launching security tokens at a primary issuance level and may not have licenses to support a secondary market, which would be in your next section in the report. And these platforms are essential for tokenized RWAs as their role establishes their genesis. And so looking at tokenization platforms from the primary issuance perspective, and let's say in the United States specifically, a lot of people are interested in real estate and different tokenized assets like fine art even, or wine or things like that. But let's start with the one that people have seen the most traction in terms of issuing treasuries and money market funds. Which of the tokenization platforms in the US would you guys kind of consider as the leaders today? And if you guys don't want to name names, you don't have to, and we can move on.
That's definitely not a problem. No, I mean, again, we can just kind of look at it from like a market size category, and Securitize represents BlackRock's fund. And that's why this year is fun tool, because the largest asset manager in the world basically came out and said, we're all in on tokenization. The Tour of Capital Markets launched this product, which the liquidity market is what we call it, liquidity products, because what these U.S. Treasury products and similarly called money market funds, they're referred to, and used to in many cases sort of as a liquidity alternative. Now that you have 24/7 swappable liquidity products, money market funds, et cetera, you essentially could almost replace cash in the future. There's almost like no reason you would ever need to go to cash if you can start to interact completely using these products. So they could become enormous, and which is why a huge amount of people come into the space. But BlackRock fired that signal off, that gun for the race to start tokenizing liquidity products. But Benji was actually, by Franklin Templeton, was the original one that actually came to market back in 2021. So it goes to show you, and even though they have similar size in AUM, about $500 million, Franklin Templeton close to that, they saw a very serious diff level success with Franklin Templeton focusing more on retail and on the crypto native audience, and with Biddle more focused on the institutional. It's $5 million as a minimum to get into that product versus just, I think it's like $5 or $100 or something like that, or maybe even more, but it's a much smaller number, 5 million. Regardless, those two are sort of the category leaders by institutions. Franklin Templeton, $1 trillion asset manager, BlackRock, something like 10 billion, right? So these are big firms that have sort of told the rest of the industry this is very interesting. But as I mentioned earlier, there are other firms like Ondo and Superstate that was just mentioned, is also more focused on institutions. But Open Eden and Ondo, they have retail-focused products, again, designed for more integrations into DeFi so that they can be used within these applications, tapping into real-world asset yield, if you will. And that's an exciting trend to also see around, because it's encouraging other players to all follow suit and other DeFi platforms to say, hey, we may want to figure out how we can natively integrate support for Ondo so that the over 1,000 plus investors that hold that product can now go use this within DeFi in that application to maybe borrow or to sell to an automated market maker or something else. So the liquidity category is very exciting. Even Coinbase's asset management team has mentioned that they're going to be launching a product. Ripple is going to be launching a product. We've seen many other asset managers around the world also launch similar products. So it's an exciting asset class that grew from like a couple $100 million last year to now almost 2 billion in investors across the category, and continues to grow very fast. So, hopefully that gives you a little bit of light on who the category leaders are in that space. But if you go to our report and you just head over to the liquidity products section, you'll see that there are a number of different products available from a lot of different providers. Because again, there's a lot of different use cases and ecosystems and blockchains that they're all going after individually.
And for just anyone who's just joined, that report that Herwig has referenced is in the pinned tweet right there. And it really is incredible, guys. Every product that you hear us talking about on stage here, they have pretty much a dedicated section to. And so if you want to see the latest that's been going on with each of these individual products, tokenization platforms, or any of the other things we're going to be talking about, we highly suggest that you go and check that out in the pinned tweet. And also want to remind you all that if you have any questions about anything we're talking about, if you want to, under the first pinned tweet, go and drop those questions there. We'll make sure and get those to the panelists for you. And so with that, we've been pretty focused on the U.S. market exclusively, talking about key trends as we are both based in the U.S. right now. I would love to talk a little more about the global developments we've seen in tokenization, specifically with how we've seen some regulatory developments with ESMA and MiCA and how those are fostering growth over in Europe. I don't know if you guys have any specific trends that you're seeing over there, or just generally if you could inform the audience on what's been going on with the regulatory developments there.
I'm actually natively from Belgium, and we see a lot of our clients on the consulting side from either, even if they're in the US, looking at Europe to expand their token offering into, or of course, a lot of, native issuers out there looking to tokenize. And Europe is a fascinating ecosystem because, as you mentioned with ESMA and MiCA, it kind of standardizes some market rules around tokenization across Europe. But you've also got a ton of activity happening in the UK with primarily Archax as the leader there. They've got the licenses. They've been working with Aberdeen, which is, I think, the largest or one of the largest $1 trillion asset manager out in the UK. They've got a lot of different integrations. They've got a partnership with Ripple, actually. Funny enough, we keep talking about them. And we also see the regulators say, hey, we've got a sandbox. Come work with us. We want to figure out how to help you tokenize. You got the Bank of England saying, hey, we support tokenization. This is going to be important, etc. So you see a lot of support both in the UK and across Europe with these laws. What's that did? It's creating a lot of clarity. That's giving a lot of issuers confidence that they can go out and issue with a lot of these platforms that, again, over the last several years, if you go to the marketplaces section, you'll see a lot of them that are international that have been getting the licenses to be able to support, investors across Europe, whether it's out of Switzerland or Luxembourg or a variety of different other, countries in Europe. that have all essentially also Spain and several other countries also with their own sandboxes by regulators, again, saying, hey, come work with us. Italy, it's worth checking out. Invest, they're working with Agricole, Italy, one of the biggest banks over there. And they're sort of helping work within Italy's regulations to be able to enable tokenization out of Italy, et cetera. So there's a lot of activity. The European Central Bank is doing a ton of trials where they're using tokenization for settlement and other cases. So again, this is bringing a lot of clarity that's missing in many other jurisdictions, especially in the U.S., where we have a path forward, but it's just not ideal, and it doesn't give a lot of institutions confidence. Again, BlackRock and several others like Franklin Templeton have taken that leap to help bring market trust to what is happening with tokenization, because due to crypto and other things, it definitely still tends to get a questionable rep sometimes. But that is slowly changing. This year has definitely made that possible. And thankfully in Europe, you now have a very clear path that, well, used to be a lot of bonds, and you still see a lot of bonds get issued out of Europe. Now you're seeing a lot of other products and use cases leverage tokenization, and a really healthy ecosystem start to form out there.
That's incredible. And yeah, there's been a ton of development in Europe, and they've been providing pretty clear regulations, like you said. So exciting to see all that going on. Jason, I don't know if you had anything to add there. If not, I'd love to hear a little bit about what you guys are seeing in the APAC region in terms of tokenization. Is there regulatory developments there? Is there tokenization platforms there? If so, who would be the ones that we should know?
That's a great question. I'm actually a fan of... I'm on, right? Can you hear me?
Yeah, we can hear you.
Perfect. Yeah, so actually it's a really good segue from, obviously regulatory into just the APAC region itself. But, just to bridge the two, if you will, we've seen partnerships kind of arise, right? We've seen, for example, Basis Pro here in the U.S., they're organizing a wine fund. For that same client, they decided, well, let's expand our reach and now go to Singapore. And so they partnered up with InvestX, excuse me, with Julian Kwan leading the team there. And that platform on its own is doing a lot of cool stuff. They've done, something that they are calling essentially on-chain tokenized portfolios, or OTPs. Basically, you get to follow, let's say, an influencer or someone that you trust, their investment strategy. Go ahead and copy and paste basically what they're doing. So they get to get creative with it. And then we've also seen Hong Kong has, been very strong on the debt issuance side of things. We've seen multiple bonds, including a multi-currency, multi-tranche bond, 4 currencies, 4 tranches, all different terms for each a tranche, yet a single issuance that they did over there. So that was really cool to see. And of course, you can see more debt on stm.co. And then in the Middle East, I guess, as a final, closure your thoughts. They're starting to move as well. We've seen people start either opening offices there or at least starting to consider doing business there. In a similar fashion of, it's changing arms or changing jurisdictions. We've seen Red Swan start, but actually did close a deal with a real estate developer there in the Middle East. They're doing a $4 billion portfolio that they're bringing on chain, comprised of not just, raw land and farmland, but also up and coming developments as more money is coming on to that side of the world in terms of, real estate development. So all great things that we're seeing in the APAC region that are very exciting. And to tie back to regulation, I think, things are a little bit more, especially in Singapore, they've always been very forward thinking, at least from the APAC side of the world, including the MAS specifically, working with Project Guardian, which I'm happy to type into more, but that's their more institutional project.
We're going to dive into Project Guardian here in 1 second. I have one more question to kind of round out the world there in terms of tokenization. The only region I feel like we're really missing right now is LATAM. And with their current crypto adoption, I would expect that you guys are also seeing similar adoption with tokenization. Again, that's just an assumption. So I'd love to hear what you guys are seeing in the LATAM region in terms of tokenization before moving into institutional adoption.
No, you're 100% right. And we are starting to see a little bit more, deal flow there. There's a company called Kavak, Kavak, that's doing car financing for used car financing. And they're based out of Mexico and want to expand into Brazil. So they are doing an offering to get some capital. There was some working capital. So that's been an interesting use case there. Obviously, some attractive yields rather than here in the U.S. for any U.S. investors that want to participate there in a legal way. We've also seen backed finance. They're, I believe, out of Switzerland. They've tokenized stocks, ETFs, bonds, and they want to reach the LATAM, countries as well, investors So they partner with eNorth Securities. They are a licensed exchange out of El Salvador. So to your point, Salvador being very forward thinking. And so they're going to be offering it to lifetime investors through eNorth. We actually just did an interview with them on our security token show this past Friday, if you want to check it out on YouTube. But yeah, so lifetime is definitely coming up. And then real estate, of course, is the go-to example, if you will, of Polybit, working with DigiShares also out of Mexico and Colombia to tokenize real estate in those regions. So it's starting to pick up.
Realty's been doing a lot of pre-construction buying in Colombia, and a shout out to Ether, who's doing a lot of bonds in Mexico and others too. So
that's incredible. And thank you guys for really just covering the whole world with us there. At Infineo, we really see the global reach of token being one of the pinnacle aspects of it. Dr. Murphy, I don't know if you potentially want to speak to some of the issues that exist in life insurance and why it's so important to have a global reach with it. And if not, we'll move right into institutional adoption.
Yeah, I mean, I can chime in real fast here. Great discussion so far, guys. Yeah, the issue that we're addressing with the small piece that we're playing in this big picture is that right now, permanent life insurance in particular is just as an asset class, has a lot of interesting characteristics. For certain types of investors that want stable, dependable growth, in a U.S. dollar denominated asset, it's actually in many respects better than treasuries, I would argue. And yet that's not right now something you can just as an investor, you have a portfolio of fixed income, you can't easily add, give me $3 million of license. There's a lot of strings involved, like the license is involved in having to pay premium, enforce and all that kind of stuff. So that's just why it's not a very liquid, accessible asset to the even retail or institutional investor. But if you tokenize it, and then, there's some party behind the scenes that's like making the premium payments or whatever to maintain the asset that then has been tokenized and put on the blockchain, then it just opens up everything. And so that's, just one small element of when somebody says, what's the point? Why would you put life insurance on the blockchain? What does that solve? And then that's just, to give you a quick 2-minute explanation of some of the efficiencies we're unlocking.
Perfect. And thank you for adding that context there about Infineo, Dr. Murphy. And with that, guys, I'd love to talk specifically about the institutional activity we've seen. We've talked already about Superstate and BIDL in particular, but in your guys' report, you guys cover about 20 different institutional firms that are interacting in the tokenization space. Specifically, you guys mentioned ABN AMRO a bunch, SIX Digital, Tel Aviv Stock Exchange, Goldman, and just to name a few. There, like I said, there's about 20. I highly suggest everyone checks that out. But beyond Superstate and BIDL, you guys track over 15 billion in issued bonds, and that's a lot of institutional activity. So who is accounting for a lot of that outside of Superstate and BIDL, and what activity were you very excited to see this year?
Yeah, there's, institutions are attacking this in a number of different ways. So there's definitely, if you go through the report, you'll see that there's a bunch of use cases they're going after. Specifically, when it comes to bonds, that's definitely being done more by like the traditional big banks and a lot of trials and use cases. I think I mentioned earlier, the European Central Bank is doing a lot of trials. They've done a lot of bond stuff. SocGen's done a couple of public blockchain issuances. There's a couple of providers like Bitbond and others that have been very active in issuing bonds and products. Obligate out of Switzerland, but I'm not certain. They're doing a lot of bond activity. Worth checking out Micro Capital, who actually has done a couple of bonds, though. Institutionally speaking, there's a lot more happening, right? What's different this year than all the past years, other than BlackRock saying, hey, we're building a product on Ethereum, by the way, which is another major difference. This isn't just like Onyx by JP Morgan, which is their own private chain where they do everything, behind their own walled garden. But what we've seen this year is all the other players also say, hey, a lot of major players, I should say, hey, we're getting into this space in a very big way. For example, Citibank launched their digital asset service platform to basically enable tokenization in a commercial fashion. Goldman Sachs did the same thing, saying that they're going to launch 3 projects by the end of the year and essentially open their doors to tokenization. Right, so where we traditionally saw where you're saying like Securitize and Superstate and many of the other players, those are the startup providers that are kind of launching their technology platforms. What I'm referring to are the actual, big banks, in this case, doing it themselves. So they are absolutely also in the ecosystem looking to create their own solutions. You've even seen a couple of already sort of like coalitions, like the Regulated Liability Network form. And you see a lot of activity, not just outside the U.S., but HSBC, Nomura, and MUFG, and many others are also very, very active creating products, launching products, getting licenses, launching ecosystems around tokenization. So, it's not just sort of these use cases and trials anymore. It's saying, hey, we're opening up our doors for business, which means that very soon we're going to see a lot of really institutional use cases come to market. They probably won't all be available to retail. That's where Franklin Templeton and WisdomTree themselves are really trailblazers. The rest of them are focused on, their usual book of business, their institutional partners and clients, and saying, hey, how can we leverage? And that's cool because they're not just saying, hey, we want to put out a token. They're saying, hey, how can we transform our back office? Because we see, percentage points in savings thanks to this. We see hours and hours of time saved thanks to this. I'll let kind of Jason talk Project Guardian and the cool, results that have happened from that. But that's kind of where I'll end my piece, which is that now officially institutions are here. They're launching funds mostly, or bonds that are tokenized. And you're seeing other institutions say, hey, we'll create the technology for you to do it on so that you don't have to go to one of these startups. Even the likes of like S&P Global and Moody's and Morningstar, they're all starting to do ratings and risk assessment on different, products out there. So again, we're seeing institutional financial adoption, which is extremely exciting. Jason, you want to cover Project Guardian?
Absolutely. And just tied to your earlier point on institutions, really they're, building their own or acquiring. Even we've seen some good M&A activity lately, including Deutsche Börse acquiring funds, DLT. Towards the end of last year, we saw DTCC acquires the currency, which they automatically, put into good use as they're involved in multiple of these consortiums and whatnot. Obviously, the DTCC being someone that has their arm in multiple institutions. But to touch on Project Guardian, that's the project from the Monetary Authority of Singapore, the MAS, that I referenced earlier. Essentially, what it is, it's a consortium that the regulator there has kind of put together to test different aspects of tokenization. So they have different work streams. One of them might be fixed income versus another one is wealth management. Wealth management one, obviously, in a biased way, caught my attention the most. But we also, did cover it from the perspective of multiple participants in that proof of concept at our Tokenizers conference. And some of the takeaways there were, if you're a wealth management firm and you're trying to rebalance 100,000 portfolios, that will take around 3,000 steps. Why? Because it's not just stocks and other public equities and debt that you're getting in and out of, but you're also now including alternatives, not just alternatives from your own native bank, but also probably from other partner banks and so forth, which means radiation and so forth. So including blockchain really has streamlined it and their proof of concept down to bring those 3,000 steps to a few clicks of a button. And so, that also has implications into the returns as well. They also saw, cash drag if you usually save 3% cash for settlement and whatnot, and other, market changes. You can now reduce that by 18%. At least that's what they found in that Project Guardian proof of concept. So multiple things going on. And then at Tokenize this, Onyx Digital Assets decided to say, well, look, we've already kind of proven this to work. Obviously, we're looking to now get more into production mode. And we are now opening Onyx Digital Assets to third party issuers, developers, etc. So that's something to see soon. I would assume that, we'll see some first partnership of the third party really plugging into Onyx.
Guys, incredible overview of all the institutional activity we've been seeing and the things that if you hadn't been up to date on, you should be in the tokenization industry with the institutions. From your guys' report, there was just one company that we didn't talk about yet that I was curious to hear your guys' thoughts on in terms of the institutional activity section, and that would be WisdomTree. I just know they've done a couple of different things in the space and would love to hear your guys' overview of what they've done and how you see that kind of working in line with the different institutional activity you guys have already talked about.
Yeah, no, WisdomTree is definitely another trailblazer in the institutional space because for the last several years been building out an entire infrastructure on chain with their CEO and their whole team really recognizing that this is the future of the next markets. They actually they're now I think around a $90 or $100 billion asset manager, something in that range. And they made that success as sort of a newbie on the block with ETFs and similar products, being a trailblazer in those, right? So they're seeing that tokenization is a better form and efficiency and sort of wrapper for these different fund products. And they're saying, hey, we're going to take advantage of all of the new benefits that this does and be a leader in this, because that's how they see that they're going to get their next wave of massive capital injected into them, right? And so they now have an app called Wisdom Tree Prime that I think it's almost in all 50 states, if not already, but it's getting there if it's not. And they are basically put their own broker together. They got their own license that they actually acquired from Securrency for transfer agent stuff. They built their own, platform and app. Basically, now you can onboard to them where you can take advantage of buying into what I believe is around 13 products that are all on chain, if you will. They're registered with the SEC because they're open to any investor, retail investors, if you will. And it's a very smooth experience to investing, and they offer a lot of cool benefits like same-day set, being able to actually get a debit card tied to your account so that you can actually sort of use your investment holdings if you needed to sort of add in the actual real world using a debit card. So they're doing a lot of very cool stuff. And although it's not like Franklin Templeton where they have peer-to-peer transfer capabilities, or Biddle where you can see all of that activity on chain on Ethereum, Wisdom Tree is using the technology in the background, not in front of people, not forcing them to learn what tokenization is, but giving them the features and the benefits of having an on-chain financial, infrastructure. And so that's what's really cool about Wisdom Tree and what they've done. They're seeing a lot of success with it.
And that actually segues us perfect into our next section, Herwig. I was going to next talk about the technological innovations we've seen in the tokenization industry that are helping fuel its boom. And it really seems like the user experience, being extracted away from wallets and different things like that, are making it much easier to interact with tokenization platforms. Are there any specific innovations we've seen over the last year that you guys think are helping drive that boom, whether it be things like having debit cards like you just mentioned, or being able to make the process easier and abstracting the wallet away through like Magic Link or things like that? Or is it just through ease of use of blockchains and more applications with time?
Yeah, we might have different answers on this one, but I don't think I can give too much credit to any of that. I think we're just in the early phases of evaluating some of these products current market like Wisdom Tree to do that, who are trying that out. Because it makes a lot of sense, right? If you want scale and you want to grow in masses, you got to eliminate that friction. But in some cases, in many cases, the whole self-custody, non-custodial wallet model is what's revolutionary. And there's a lot of benefits of tapping into the blockchain ecosystems around the different chains and the different support surrounding it. That's what you're seeing. Franklin Templeton, by the way, for those of you who don't know, their Benji, their money market fund actually is on multiple chains, Stellar, Polygon, Arbitrum, to name a few here. And that's what's really cool on one end. And then on the other end, you see this idea of, okay, well, what about, the potentially non-tech focused type of people that might still want to take advantage of these efficiencies? They need to have, products that don't have this stuff forcing them to learn what it is. So it's going to be very interesting. You'll see an adoption across the board where you have very bleeding edge companies, especially focused on DeFi, with the whole category on the report. But then on the other hand, you have, again, many more of the institutional or even traditional startups that you'll see even around real estate in many cases, where they try to remove the process and say, hey, we're just trying to make it easy for you to take advantage of these benefits. These benefits being that now you can invest digitally. You can invest with a lot smaller ticket. You might be able to sell it without having to have a token in your face. Might be able to take a loan out against it, et cetera. So you can still give a lot of these features without having to force the user to learn. But in many cases, it's easier to manage when the whole ecosystem is natively on-chain using wallets to connect. It allows for a lot cooler features and a lot more benefits that, you just might not be able to get fully from the background. So to kind of get to your question around the growth of the industry, it really is, we have to give a kind of a big shout out, if you will, to the fact that we have, a great interest rate environment where 5% became a very attractive option for a lot of different use cases and investor types. And so as a result, that's why we've seen this large surge and increase, and that is opening up the way to other products as people sort of start to go down the risk curve as you brought up earlier, and say, you know what, I'm okay with, something that is slightly less liquid, but has more of a return profile and slightly more risk associated to the asset. And slowly but surely, you'll see that momentum grow. So that's where the real excitement is you've got these variety of categories that we tried to break down in our report between like real estate and tokenized stocks and even bonds or liquidity products and similar funds, private credit, et cetera, that are all starting to see some real traction that are going to help lift the whole industry up, as opposed to, I think, like any one individual feature being the reason that this industry takes off, if that makes sense. I don't know if Jason has anything.
No, I agree with all of that. I think the other thing that's also grown is distribution to a certain extent. We've seen ADDX out of Singapore start working with wealth management firms to get their products, their tokenized assets into portfolios for clients. We've seen Heron Finance here in the U.S. They're a private credit only wealth management platform. You would not notice that there's blockchain involved at all or that anything's tokenized, yet it is. It's a very Web2 friendly way to get into private credit and still reap all the benefits of blockchain. So that one's cool, and they're actually owned by the same company as Goldfinch that started it. And then we've seen others, the acquisition from Securitize on-ramp invest, right, have RIAs be able to tap in, similar to what ADDX did. So seeing more and more of these start to pop out, which is really great. Yeah, that's all I'll add for now.
Yeah, just to chime in, a lot of good information there, guys. An element that to me, I think really just shows just how much more, I don't know, value, what term we want to use, is going to bring to investors, both institutional and retail, is the point about the transparency and that, people will know the riskiness of the underlying assets. So, for people who really want, just to give you a specific use case, something that is going to be redeemable, let's say in US dollar or euros, and they want to just know the liquidity of the underlying collateral that's backing that up. Like, you just see what it is, and then they can just have a better sense of what the trade-off is, that, okay, yes, I can get a certain amount of yield, but then realize that, if there's like a bank run by more than 30% of the users, then we're in trouble. Whereas somebody who wants something to they absolutely know it's going to be there, and, they basically got full reserves, but then, there's no yield, because how could there be? Just seeing that trade, like, so that exists in the, in the analog conventional world as economists, we study this and argue about it and so forth. But, here, I just think with blockchain, what that brings to the table is just much more transparency, so that the end user can choose from a menu of possible options, the ideal risk reward trade-offs that they want, and at least know exactly what it is that they're, pouring their capital into.
Yeah, I think that's a point, Dr. Murphy. I mean, we're talking about bringing a new level of standard and almost using transparency as a competitive advantage in the marketplace using this technology, right? So I completely agree with you. In fact, it's sort of even changing the game a little bit, where you see startups like Particula and Credora, which is backed by the SEC, and also even, as I mentioned earlier, like the big rating agencies like Moody's and Morningstar also start to bring risk assessment and ratings, technology and their capabilities, etc., and knowledge into this market, so that they can also provide service industry. So now you've got multiple levels of accountability and transparency that, I think forces managers to potentially be better with their investors across the board. The idea that you could just sort of be opaque, report things once a year, and provide your return was all you had to do is not going to be possible when you're trying to create potentially liquidity or demand around your product using a token. So I think that's a great point.
100%. And thank you for adding that, Dr. Murphy, and for the additional context there, Herwig. In terms of the tech we've seen, that was really great. I really just wanted to hone in on one specific part of the tech, which you guys have a whole section about in the report. So just kind of high level, if we can, I'd love to hear what blockchains, public blockchains in particular, you guys have been seeing tokenization activity on in the last year. And then potentially, if you want, even open up the discussion of if you've seen more activity on public or private blockchains in the last year.
Well, again, it depends on how you define activity, because JP Morgan's Onyx has a repo arm, and so does Bridge, that's doing billions a day, I think trillions now in total, in repo transactions, right? What banks basically use to manage liquidity between each other. And again, this is where the efficiency comes in, because using the blockchain makes it easier and saves time and money. And therefore, even if it's down to basis points and savings, that river of pennies adds up into a lot of money in a more competitive sum which is why both these companies are, going after that segment. But, so there's a lot of activity. We even saw JP Morgan do a pretty cool bond with Quincy, the Massachusetts, county, or that basically they did a municipal bond with it. So you see a lot of very cool activity. You definitely see a lot more traction from public blockchains in terms of, again, tapping into the DeFi component, as well as a lot of different use cases across real world assets, not just necessarily like securities and investments. But if I had to sort of break up the industry, you really got a lot of the activity focused around, still Ethereum, the original use case for tokenization. You saw a lot of platforms that kind of were built around that to help tokenization. Now they're starting to support this new category of layer twos, because the transaction fees were certainly making it, a difficult or, complex and expensive process. So now you have a lot of activity on Avalanche, on Polygon, even Base, which is blockchain's new, Coinbase's new blockchain, that has a lot of activity on it from an RWA perspective, as well as across third. E-commerce like Mantra and others are coming into the space really with an Arbitrum also making a huge wave in RWAs. But then you've got a lot of the sort of private permissioned blockchains, or public permissioned, like Polymesh and several others that are also starting to take waves as opposed to just, and Allo is another example if you want to go check that out. But otherwise, you see a lot of the traditional platforms and institutions use something like Hyperledger Fabric if they're really trying to make a permissioned implement or build their own sort of fork off of a public chain like we saw with Onyx, and then make their own version out of it in a private permissioned way. So you really have a lot of different activity across the board from different use cases and different, issuer types. And I think there is no one solution other than everybody, even the big institutions that are operating on these private networks, they've acknowledged that public blockchains are likely the future because of all the advantages that it comes from being on a public blockchain, right? And BlackRock was forward-thinking enough, Franklin Templeton was forward-thinking enough, et cetera, to already make that leap. So I don't think it's too much to say that over time it will become, again, an industry requirement. But there are many more chains like Race and Paxum and others that are starting to say, hey, we got to also focus and launch on RWAs in a dedicated manner. This industry is so huge, hundreds of millions of assets and real estate and bonds and debt and collectibles and all other different kinds of use cases, commodities, et cetera, that can be tokenized, that it's hard to say that there's only going to be a few chains that, and in fact, as we pointed out with Franklin Templeton, what you're going to see is a lot of multi-chain assets, especially the bigger ones, because they're going to want to make that interoperability to take advantage for you as a user to hop between chains, because there might be a different application that's only operating on Avalanche that you want to go take advantage of. So you need to go switch out of Polygon and make sure that you can go ahead and take advantage of it, even to the extent of going out of blockchain and into traditional, because you do have some use cases where some people want to usually stay traditional and then make their way to blockchain. So you got to be able to support both. So yeah, definitely go check out the report on a lot of the activity, but many of them are just doing what they can with grants and integrations and support to make it possible to use their chain to tokenize, RWAs of all kinds.
Yeah, and just to add to that, we've also seen this cross-chain narrative, even the institutions themselves too. The Project Guardian example we gave earlier was 3 blockchains. It was Onyx Digital Assets own chain, Provenance, and Avalanche. And then there were funds from Apollo, Wisdom Tree, and JP Morgan, private bank. Then anyways, as a tokenization platform. So a lot of, people or platforms talking to each other, a lot of chains talking to each other, and yet they were able to reach those efficiencies across different platforms and chains. We also saw Canton Network, more of a consortium, led by Digital Assets, that has, they did a huge pilot a few months ago. It's 155 participants from 45 major organizations as institutions. And then they did settlement of different types of financial products, across 22 permissioned chains. So institutions are already figuring out how to talk to each other, obviously, for anything EVM compatible. That's coming out later.
That's incredible. And that actually brings me to the one audience question we have, and last question here before we wrap things up. We have from Eng Bendar Faki. I'm going to read it as is and then try to interpret it. It's, given the importance of scalability, low fees, and security in your tokenization strategy, how do you view the potential of established blockchain networks like Bitcoin Cash? And so we've already hit a little bit about on how people are focused on low fees and scalability of the networks, and there's even blockchains coming out specifically like that. But it seemed like they were interested in hearing about Bitcoin Cash specifically, and I'd even potentially extrapolate that to Bitcoin and the Bitcoin ecosystem in its entirety. I know that there's some interesting things going on in the Lightning Network ecosystem and Liquid ecosystem. If you guys could potentially speak to what you've seen with Bitcoin and potentially even Bitcoin Cash in the future as an established blockchain network for tokenization.
Yeah, no, as I mentioned, I think you're going to see all chains eventually recognize how big, and important and critical it is to support RWAs. So, in fact, in the last year or so, you've seen a number of chains like Solana, Ripple, and others all hire dedicated, heads of tokenization and RWAs. So I would reckon that Bitcoin Cash would eventually also figure out a way to support RWAs. The biggest problem is, of course, you need to have smart contract support. You've even seen chains like Liquid, and there's a couple others that are basically enabling a layer 2 on Bitcoin so that you can use smart contracts, but still leverage the Bitcoin infrastructure to issue RWAs. And there are some very successful tokens that have been issued using these Bitcoin network layer 2 protocols, so like Liquid. So definitely, I would imagine that Bitcoin Cash will do what it can to, I'm not as familiar with their current strategy and how they're structured to pursue that. But, I would imagine, again, that this becomes the most important thing in the next couple of years for at least most chains to at least stay competitive. And otherwise, they'll have to really figure out another niche that they're strongest at. Because this is where, when we put trillions of assets on chain, which is what we're talking about, that's where these transaction fees and these protocol fees and other applications, et cetera, will be coming from. So that's where the industry will build and take advantage on. So it's definitely going to be interesting to see, probably what will be at the end of the day, maybe 5 to 10 big chains, private and public, that people end up using. But it certainly won't be 1 or 2 like we see with kind of like operating systems and phones and things like that. I think this is a much bigger use case that it's hard to pin down to just a few chains.
That makes a lot of sense to me, Herwig, and thank you for answering that question for the listener. And with that, we're up on time, guys, but I have had so much fun talking about the industry with you guys. It's always incredible hearing your guys' insights, and honestly, this report is just so incredible. If you have not checked it out yet, I highly, highly recommend that you do. It's in the pinned tweets right there for you. And with that, before we sign off here, guys, is there anything that the audience can do to stay in contact with you? I believe you have a webinar upcoming that I will personally be attending. And so anything you guys want to leave the audience with before we wrap up?
Yeah, that's right. We got a great webinar on Thursday with Moody's and Aquila talking about risk assessment and ratings. So click in on that transparency and the benefits of how this industry is taking that over. Of course, check out stm.co. It'll get you to all the trading data and all the different access to the asset information you want to see about what's tokenized around the world. And check out our YouTube channel. We've got a ton of great content on there. It's STM TV official. But Security Token Market has a ton of content from our weekly Friday security show, as well as a bunch of interviews with industry leaders and the like. So definitely go subscribe and check out the content there. But I appreciate everybody who's listening. And as I always like to end my shows, I want to wish you all, happy tokenizing.
Happy tokenizing.
Thanks for having us, Jackson. Dr. Everyone, this was great. Always excited and happy to talk RWAs. Send us a DM, by the way, here on the STM account if you have any questions or want to have a chat. We're always open to talk to anyone and everyone about tokens. So then, have a great day, everyone. Thank you so much.
Yeah, thank you, everyone. And again, this has been the Infineo RWA Space. We host this bi-weekly on Tuesdays at 12 p.m. Eastern. If you want to stay up to date with Infineo, the best way to do that is going to be to subscribe to our newsletter. You can do that by going to Infineo, infineo.ai/newsletter, and you can subscribe there. We look forward to seeing you on the next one. Thank you again, Herwig, Jason, Dr. Murphy, and all listeners.
Cheers, everyone.
Have a good one. Thanks, everybody.